Hello everyone, Buffy the Rate Slayer here, and this is the second September episode of our weekly Market Insight series, coming directly from the Capital Markets Trading Desk, right here at Sunwest Mortgage Company. Let's get into it. Markets have been down this week as investors ponder the Federal Reserve's next move. The U.S. labor market has been resilient and has fueled hopes that the economy might be headed towards a soft landing. The speculation that the resilient economy data released might lead the Federal Reserve to further tighten their policy. This has led to gains for the U.S. dollar, which is headed towards its longest winning streak since 2005, with this 8th consecutive week of gains. Economic reports have shown the strength of the U.S. economy. As a result, Federal Reserve officials will probably need to double their economic growth projections when they update their outlook later this month. The prospect of a soft landing is in contrast with the expectation that the economy would stall, as was anticipated just 3 months ago. Applications for U.S. unemployment benefits fell to the lowest level since February. Initial unemployment claims decreased by 13,000 to 216,000 in the week ending September 2nd. Continuing jobless claims for the week ending August 26 decreased by 40,000 to 1.68 million. Consistent hiring and limited layoffs are strengthening the labor market. Strong labor market is a good sign for an economic point of view. However, this will keep the Fed in a restrictive policy position for a longer duration to control inflation. The revised productivity report showed a downward revision to 3.5% from the initial estimate of 3.7% in the second quarter, and an upward revision in unit labor cost to 2.2% from the preliminary initial estimate of 1.6%. The U.S. trade deficit widened to $65 billion in July. Exports were $3.9 billion more than June exports, and imports were $5.2 billion more than June imports. There are some signs of a global slowdown, with exports down 3.5% year over year and imports down 4.7% year over year. On Wednesday, the Mortgage Bankers Association released the mortgage application data for the week ending September 1st. Even though the average contract interest rate for 30-year fixed rate mortgages had decreased to 7.2% last week, mortgage applications were down 2.9%, marking the lowest level in 28 years. Purchases were down 2%, while refinances were down 5%. Meanwhile, in Europe, high energy costs and weak economic growth have caused markets to suffer losses. On Wednesday, German factory orders dropped to their lowest level since the 2020 pandemic, causing the stock 600 to fall for the 6th day in a row. In August, the Chinese property sector showed signs of financial problems, driving China to an economic slowdown. This has caused Beijing to implement measures to support the ailing industry. These measures include lower down payments and lighter mortgage rules for homebuyers. Meanwhile, Tuesday's U.S. dollar gains alarmed Asian countries as their currencies fell and the Chinese yuan slipped to a 16-year low. It brought Japan and China to step up efforts to defend their currency as their currencies hit a multi-month low. Well, I'm sorry to go, but that's it for this week, everybody. If you like this video, please hit that like button below, and to be notified every time we upload a new video, please subscribe. Your support to our channel is greatly, I say greatly, appreciated. Thank you so much for joining me. Stay updated with our news, and our trading desk will keep you informed with our pricing incentives. As always, Buffy's up.